Good day to one and all. This is Dr. Sivaraman of IKnowIndices.com. I have given between 11:30 and 12 GMT before the GDP data release the spike trade call. That I call it as the pre-GDP data release time. Now we are on the post-data release time. That is 13 to 13:15 GMT, 15 minutes post-GDP data release. I will just discuss what happened to that of the calls I have given and also explain what they are expected to do during the rest of the day. So I was explaining that they are expected to make a swing and from a move up to 13 GMT. From 13:30 GMT, they are expected to make the swing and rise move. The case of Euro and GBP as well as USD/yen. And I was explaining you that it could be an unch or unchanged condition. So the actual is 0.8 is the US GDP data release against that of the expectations of 0.9. Yes, nominal change, and so they are not able to bring in any big spike in the market. So now coming to that of the trade call, which I wanted to give focus. Now in the case of Euro, I had just taken a buy around 1.1168 with 1.1130. Still they are not gone, and that is a buy position. GBP also, they came down to 46.30, 31 now, and 46.45, 4600. I kept the hedge order. Then in the case of Australian dollar also, they just breached the 72 mark, and then it has got a buy position. 71.60, I got the hedge order. In the case of USDN also, 62 I kept, and they just breached 109.56 by about 9 pips and come up very quickly. So these are all the positions I recommended, and so they are slowly expected to firm up. Now 13 GMT, and then 13 to 13 GMT is the gap time, and during that of the gap time they are expected to make subdued moves in the market. And afterwards, from 13:30 GMT onwards, during the US session, they are expected to slowly gain the levels in Euro and GBP as well as USD/yen. So before that of Euro and GBP rise, they are expected to make the rise in the case of USD/yen, and that we will be able to see. And later on, they will gain the levels in the case of Euro and GBP as well. And that is the strategy they use in order to gain the levels in the case of GBP/yen, Euro/yen, etc. Australian dollar, yen, etc. So that is how they gain the levels in the case of the yen crosses. So here you continue to see the contrarian move, that Euro GBP as well as USD/yen showing negative net change, and USD CHF and USD CAD showing positive net change. They just nominally gained in the case of USD CAD, and nominally made a dip in the case of Australian dollar, and they are expected to reverse because the gap time move, gap time, they always make a false move, make a small dip, just induce the traders holding long position to liquidate before the start of the US session. The US session starts by 13:30 GMT. And if you see that between 13 and 13:30 GMT is a gap time, during that time they make a false move, pretend as if the market is going to collapse, and induce the traders who open the trading platform to take sell position, thinking that Euro and GBP might simply collapse, and later on they slowly gain the levels during the US session. Swing and rise is expected for the weekend, and that is what you might be able to see during the day. So if you got any doubt, you can explain, you can ask me, I'll answer to those questions. With regard to the trades, what I recommended, and in the event, if suddenly they make a drop, suppose we are taking a buy position and suddenly they have made a drop as a stop and move, then our hedge is being filled. If we use the stop, then automatically the position is closed, we accept the loss. But we do not want to accept the loss and use the trading strategy in order to earn consistently from the market. Then what we do is we keep the hedge order. In the event if the hedge is filled, we watch for 10 minutes minimum and see whether the hedging is continuously making loss or profit and loss or continuously profit. So anyone should happen with regard to the hedge. If the hedging is making 10 minutes loss, then watch for another 5-10 minutes. Or if you want to be very comfortable, then watch up to 30 minutes and then close the hedge when it is consistently making loss. That means we understand very clearly during a stop and our hedge got filled and they do not want to drop more. Then close the hedge with 1 or 2 pips loss or with stop at entry and keep 30 pips below another hedge order. Then they will slowly gain the level because we read their intentions. And once they start gaining the levels, you can also trail the hedge order upward until you are able to keep stop at entry in the buy position. Then afterwards, you wait for them to gain the levels during a session. Gap time, they will make false moves, so you should not be worried about it. During the session, the early and the late session, they handle the majors. So during the early session, see the rise and wait for the mid session to get over. Late session, again, they will continue to gain. At that time, you can maximize the profit without losing patience. So in a session, early session, we can take a buy and close during that of the late session so that you can do it as a session-wise trade also. So here they are expected to gain the level because gap time they are making a dip, which clearly indicates that they wanted to gain the levels during the session. And the gap time moves a false move. So once they drop, we understand that during the session from 13:30 GMT onwards, they are expected to gain the levels in the market. So slowly, as I explained, they are gaining the levels in the case of yen from our entry. But here on GBP, they made the dip, and we will wait for them to slowly gain the levels. You can watch. Meanwhile, if you've got any questions to ask me pertaining to the market, you can ask me. I'll be willing to answer to those questions. We have another 5-6 minutes to go, so you can explain. I can explain them. You can ask in the question and answer window. I will answer those questions. So ultimately, what is more important in the market is that reading the intentions of the player. And if you read rightly the intentions of the player, then without any fear, we'll be able to take the positions. Normally, ideal way of trading will be wait for 30 minutes from the start of the session. Suppose the session is up to 13 GMT, then 13:30 GMT, the US session is going to start. Then you watch for 13:30 to 14 GMT, the first 30 minutes of the session, and they will be swinging near that of the low without breaching the low during that time. And then you try to take the buy position by 14 GMT, and you will have 100% profit by 20 GMT by end of the session. And that way you can easily understand how they are making the moves in the market. But if you try to take the position like that is during that of the GDP data release, etc., then you have to wait for the US session to come and then close the position, because unfortunately they are not done any spike on the upside or on the downside. That also indicates that the players find that volume is very less from that of the traders. If the traders' volume is less in the market, sometimes it happens on a Friday that the traders go away and they don't take any fresh positions. So there is no need for them to do the short covering. And in such a situation, the players will also make only slow gains in the market. There is a question: to what level do you see gold will go down? Gold going to 1,200. Gold could go to 11210 level and then start gaining it. And that might be an intraday low closer to that of 1,200. It all depends where the stops are. If the stops are below 1,200, they can just make a quick downward move during that other gap time before the start of the commodity markets. And in the case of the commodity pairs, please understand what you see in the trading platform is different from that of the actual commodity market. So in the commodity market, when they start with the volume, and if they find a lot of stops below that, then The players, what they do is they do the downward stop and extended downward stop in the case of the online trading, but in the commodity market straight away they gain the levels. So that we need to understand and then trade as far as these commodity are concerned, gold, silver, etc. They are expected to be highly volatile during that of the functioning of the commodity markets in Japan, London, and New York sessions. Please understand about the market. Just because they are offered in the online trading platform, if you try to take positions and you find that your going is not good, then the only way to handle such situation is to use the hedge order to limit the risk. If the hedging facility is available in the trading platform, if it is not available in the trading platform, then you have to accept the loss as quickly as possible. And the going is not good for more than 2 hours. Always keep in mind, as soon as the position is taken, you can only wait for 2 hours when it is continuously showing loss. And beyond 2 hours, if it continues to show loss, it's better to cut the position and take fresh position. And that way, you will be able to really limit the risk and maximize the reward. If the hedging is available, then keep the hedge order. If the hedge order is filled, you watch for 30 minutes. And if the hedge order is not making profit, then close it with stop at entry or with a small loss and keep another hedge order below that and wait for the market to go up. And later on, you can keep stop at entry in the buy and then maximize the profit using a trailing stop in a profit making position. And also use the exit as a trailing hedge order, trailing exit order. And when the going is good, you can just further rise it and maximize the profit also. If they suddenly drop, they will fill your trailing stop. That way you will be able to protect your profit. So now you see that slowly they gain the levels. In the case of USD yen and Australian dollar also, they have come up after making a brief downward stop. And then in the case of GBP, they make the dip. Slowly they are recovering that also. So you find that GBP is also recovering, USD yen is also recovering, or Euro is also there. They will try to gain the levels slowly. So keep in mind that alternatively they gain the levels in their currencies and then show the similar moves in the case of the crosses. And in order to handle the crosses, they just handle the majors in a contrarian way. And since they are doing the contrarian move in the case of yen and yen cross, and also in the case of Euro and GBP, it shows that the volume is relatively low in the market. That is why they are focusing more on the crosses. Is there any other question so that I can answer to those questions? No question is coming forward. So I take this opportunity, thank FX Street for the facilities provided to present the webinar. So I'll come back on Monday and give the next week forecast, that is during the Asian Session Live Market Analysis webinar. So wish you all happy trading, wish you all very happy weekend, and see you on Monday with a new session. So I take this opportunity to thank FX Street for introducing the spike trade calls for the small traders who are interested to find how exactly they can make swing trades and earn money from the market. Thank you one and all. See you on Monday.